Low-cost housing group Calgro M3 has reported an 85% jump in first half headline earnings per share to 40 million rand. That's partly as a result of a profit from joint ventures. We now unpack those results with the company's CEO, Ben Pierre Malherbe. Morning, Ben Pierre. Those are nice numbers for any company going on a previous
Especially one in the
thing.
construction space.
In construction, that's right, because no other construction company is remotely close to this kind of thing. The numbers are not huge numbers in terms of the construction sector, but 400 million rand profit, operating profit up, headline earnings up, as we said, by a great deal. Now, strategically, you're in a very good place because historically there's been this thing of the government pays for a certain, up to a certain level, it subsidizes houses to be built.
Yeah.
And then there was the gap to the lower end of the ordinary bond market. Now, they say they want to close this gap. What are the sort of numbers we're talking about as a result?
Okay, I think the first gap we're talking about is there was a gap of people too rich to qualify for government subsidized housing and too poor to qualify for the bonded products. So we sat with the gap, and the gap is currently closing, where governments are addressing that by means of social housing. Anyone earning more than 3,500 rand is excluded from the fully subsidized market. So between 3,500 and 7,500, you now qualify for social housing. That is government subsidized still, and as rental opportunities. The new product that's been introduced and coming to the market now is FLISP, where the market earning between 7,500 to 15,000 is now being addressed, where you can get a subsidy. And the policy change is basically to say, help those that want to help themselves.
You've got to be watching developments in the strike action space very intently as a player, because as David alluded to, before we came to you, this puts government in a very tight position in terms of its budget moving forward, where you've got a threat to economic growth moving forward. How
and
much
therefore
risk,
to tax revenue.
exactly, and how much risk does this then place on your position and being able to leverage off government and its role in, in terms of growing low-cost housing?
I think the first thing to look at, our exposure to government is about 30% of the business is aimed at that market segment. We've got a model where we play with public sector and private sector. Public sector, that's the social housing and the subsidized housing. But there's still a huge market out there for the private sector, anyone that can qualify for a bond. And we've got the flexibility to play between those two, public and private sector. And yes, budgets do come and go. Sometimes they're more available, and sometimes they're not. And so it depends on what market segment's more active at the time, and that's where we play.
What's your experience with government in terms of payment and the relationship financially and in a business sense? You know, we've heard from the construction sector, one company's actually gone out of business because its bills weren't paid at provincial level. One of the top companies, Basil Reid, their chief executive, has actually come out and said, government's not coming to the party, it's not reliable.
At this stage, we're fortunate. I think the big difference is we're not working for government, we rather work with government. I think these integrated developments are public-private partnerships, and we're the landowner. So we've got the opportunity, if budgets are not available, we go back to private sector. And as we sit here with these set of results, not the city of Joburg, not the city of Cape Town, Gauteng province or Western Cape owes us any money. So we're in a fortunate position where we've got the flexibility to say, if the budget is available, we work for you. If not, we're allowed to go to the private sector as landowner.
So that's a very envious position to be in right now. I mean, you boast a strong project pipeline here in excess of 8 billion rand. What kind of margins are you looking at on that order book? Because that's the key consideration to make when you're looking at any construction company where that competition has been heightened and margins have had to be sacrificed in order to grow the order book.
I think the first thing we must look at, we're not only a construction company. The fact that we do construction, is we do construction to deliver the products that we've been sold. We see ourselves as developers, and we're more driven by marketing and sales than by construction itself. So yes, construction sector is under pressure, there's no question about it. But take on a project like this, we're looking at a 25% margin. That's the margins we're looking at. And yes, maybe we're not making any margin out of construction currently, but buying agricultural land, taking it through the land or the town planning processes and bringing it to market as service stands, there's still a margin on that. Although we only recognize our margin as construction profit because we only recognize it when the unit is sold, the margin is probably made somewhere else in the development cycle rather than the construction cycle.
I think this is unique, your business model. This, the whole process of buying a house, it's not just the building and the buying, it's the preparation, the classification of the land and so on. Have you been affected? I mean, you're out there, you're building things, deliveries have to be made. Have you been affected by the strike?
Yes, we were. We're making use of local labour and they've been affected as much as we've been affected. We're working with subcontractors. We say we do all construction in-house, but we're in fact working with subcontractors out there. Yes, we've been affected, getting materials to site, but we knew it was coming. We started bulking up before the time, and we're all waiting for it to get
It's also
over.
going to affect you in another way, and that in terms of the customers you're catering to in the lower end of that bonded market. I mean, we saw Anglo-American firing 12,000 employees, and that does a lot in terms of the kind of income that low-income market is able to generate moving forward. Challenges that puts on your table?
Yes, there's no question about that. We're playing in a difficult market segment, but I think the big thing is, once again, we're sitting with a small component of employees, Calgro employees. We're making use of subcontractors, so we're sharing that risk with the market out there.
The economy generally, you have to keep an eye on these kinds of indicators. What else keeps you awake at night at the moment?
Being in property development is a lot of things. I think if you look at risk, yes, there are risks. Working with government, does it pose a risk? At this stage, we say it doesn't pose a bigger risk than working with big banks at this stage. It's the market segment. So I think we're continuously monitoring the market and say, do we play public sector, private sector? And I think that's our main thing. But we've got that flexibility to move between that. And yeah, but it keeps you awake at night.
Sorry, next results, you're not going to have results as good as this next time, doubling revenue and profit so big?
The market is out there. Our ability to grow is based on the market out there. The market is huge. The question is, controlled growth is very key to our business model at this stage. We say we've got to control growth. The opportunities are out there in all the provinces, whether it's KwaZulu-Natal, Eastern Cape, the opportunities are all out there. We've just got to be conservative enough and responsible enough to say no and control our growth.
Yeah.
The opportunities are out there.
When you say you're going to be conservative enough, does that translate to your debt levels? Because I see the group continues to monitor net debt levels, interest-bearing debt minus cash on hand, but that looks like it's going to be set to increase over the next couple of years.
Yes, we say we want to increase that. Being a less to 0.5 to 1 is not sustainable in our business. Being the landowner, we acquire property to develop over the next 6 years. We need to acquire the land. But
and possibly finding opportunity right now with prices where they are in that property market on the one hand, and also with interest rates sitting where they are.
So definitely a buyer's market, but we need to buy. We need to keep that flexibility to be able to move around, like we say. That's key to our business model.
Yeah.
But we're happy to increase our debt levels to 1 to 1, even a 1.5 to 1. We're happy. We say that's more sustainable. The current debt level is not sustainable. But we came through tough times, and debt was key to us, and we reduced debt all the time. But I think we said if we want to continue our growth, we'll have to increase the debt level.